Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So came in today, futures are down like 8 handles or so. Pretty quiet around the world, some red arrows. I apologize for the morning call. We were having internet issues, so we did it from my desk, so it was a little bit of a different look and it came out a little later than normal. But what I tried to go over is, on Friday, for the last week or two, we've been trying to be in some kind of portfolio approach where we own 2, 3, 4, 5, 6, 7 things and have a hedge depending on what's going on, or just be straight long the indices. So when you do that, you have to figure out why you're in these things and what you're looking to get out of it and what's your process and how do you use stops and how do you cut losses and how do you add to winners, et cetera, et cetera, et cetera. So I did come in with 5, 6 longs and a hedge, and I leave today with nothing. Not because everything's broken. I just, I'm a little uninterested in this spot in the tape. We did our normal pullback of about 30 handles from the highs. So this seems like a spot where people have been conditioned lately to buy. But you have the Fed on Wednesday, and earnings have been, to me, pretty lackluster. Yes, we beat a lowered bar, but a lot of names are in the penalty box, and there's just some kinds of small trades to do, and then all of a sudden little things diverge and composure changes, and it's easy to lose. So anyway, let's go quickly to the chart of the spiders. So here is going across. Here's your resistance. Okay, this was big resistance that if we would have had maybe more powerful earnings out of the big stocks last year, last week, whether it was IBM, whether it was Microsoft, whether it was Google, whether it was Starbucks, you name it, Visa, maybe we could have broke above it, but because we didn't, we've pulled back. So, is this a bigger pullback than we've had? Not really. All we've done is come back below the 8-day and above the 21-day. Last time, we were thinking maybe we pull back more. We held this, 204 area. So to me, this 207.50 to 208 area is almost like the same. So let's see if we could do some more work and turn back up or not. You could draw your trend line here, and just like it was so important right here to hold, which it did, we'll see what happens within here. This trend has been intact ever since reclaiming the 8 and 21 day right here, after your double bottom back in in February, and then it's been above the 8 and 21 day pretty much for almost 2 months, giving you a nice trend. So we'll see if it's buyable again. One of the reasons why I think some traders like me are a little skeptical is because you have your your Qs, which is already below the upper area and already below the 21 day. So it'll be interesting to see if it stays on the right side of this channel and builds a bit of we've had this before. Remember, we had the potential building of a head and shoulders top, which is what every bear keeps looking for, and it hasn't happened. This was your left shoulder, here's your head, so now all the bears are saying maybe we bounce a little bit. If it gets contained here, you'll have your first bearish pattern, and then in May, boom, 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 we shall see. We had remember we had earlier on the formation of that here, where premature, everyone was saying this was going to be your left shoulder, this was going to be your head. This is when they started drawing the right shoulder, and then it got blown out. So basically, if you were playing for a right shoulder building, it should never have gone through here. Okay, and then it got through, squeezed everyone out, held it, and now this is where we are in the Russell. So we'll see what happens here. Above upper support. So the Russell is above upper support, and the Qs are below. So we'll see, what happens to that divergence. XLE, pulled back a little bit, no big deal. This was the same thing. Every bear here was talking about the potential of this being, a head and shoulders top pattern. Can't go up anymore, and it came a little bit below this spot, and then basically this gap and go right here had to get you away from that thinking. Never filled it in. You had to cover, and now we're all the way up here above the 200 day, above the 8 day, and we'll see if it could continue to hold above there. So, if you're trying to be forward-looking about patterns in the development, you better know when the pattern changes and you're wrong. So this way you can continue. You can just move on. So let me just go through some stocks and charts, because I had a few of them on, and most guys saw me exit them on the VTF, and let me give you some clues why. First of all, I was long VRX. What I always do when there's a lot of strength in the morning, I sell a little bit into it. Okay, so just say if you came in with 2,000 VRX, okay, up $2, you sell some, and then when it goes back below a prior high, this prior high here was 36.49. That's when you sell a little bit more. If there was going to be some kind of momentum here. It should not have gotten below there, so you could have sold some strength into this 38, thinking, okay, maybe there's some resistance there, or maybe it holds and goes. But so you sell some, and then boom, you sell some when it gets below this, and then you could sell some when it goes red. So this way you sell some strength, you sell some still up, and then you get flattened out and you make some, and it just never continued. If you want to look at the 5-minute chart and see how you could have handled that, there was a mini divergence. So basically here's your gap up. Okay, so this is when I think I was looking at it again, thinking maybe it trades above this 37.50 to continue, and right here on this bar basically got me out. And if you were looking to use a true stop, maybe right here could have been your stop. Came back, never got back above, and trended lower, and that trade changed. I was also in FEYE. FEYE was one of the better ones. I had a quick move, so I was long it from the daily because of the strong close on Friday, which was right here. So, so I was long it, opened up like 30 cents, sold some, was up 50 cents. Everything else was kind of wishy-washy, so I sold a little bit more. And then I was just like, what, I don't, if the market's going to come in, I don't need to be in these, these broken names that are below everything, unless it's really, really potent. Look what it did here the last time before failing, so I just got out of it. GPRO didn't even give me a chance to get out of it. Basically, I came in thinking to myself, this broken name, but perhaps, there's another trade here if the market wants to hold up. It had a somewhat of a, a little bit of a bull type flag. So I was thinking maybe there's some kind of news coming, whatever. Looked good. I would have been buyers here and then open lower. And I sold some down 50 cents, and then it had a low of 13, I think, what was it, 12.20. And then when it just broke that morning low, I just got out of it. I was like, okay, I'll be in it for a little while. What was that? So when I say use a stop with the morning low, basically here's what you could have used. Okay, where's the open? All right, here you go. So basically, you really didn't have much of a chance. At the open, you maybe could have sold half on the weakness, and then this was your morning low. So really, when this broke below this, I'm like, I'm not being married to this. I don't care. I just put a stop here and I got out. And granted, it bounced back, but you know what? Later in the day, it wound up going a heck of a lot lower. So I think 13.20 was my stop. And why was it my stop? Boom, 13.20 right there, because that was your pivot low, my only point of reference. So I got out and it didn't work. The next one was Tesla. Tesla I was actually a little excited about. You had the article in Barron's with Ron Barron, whatever the guy's name was, saying it might be like it's a big winner. He's a big growth investor, and it was only down $1. So I was long. I bought some to go green. I bought some above my pivot, which was like 255, and then I was watching it close to see if it could actually hold up when a lot of the other stocks weren't doing so well. So sold some strength, and then I left with a stop and got out of it. Why did I get out of it? So if you look here on the daily, still looks fine, but for me, when I trade for momentum, okay, if the momentum leaves, I leave. And I was playing for it to break out above this and go. So what did it do? It broke above this 254 and then couldn't find enough strength, came back below it. So for me, that shows me it's not ready yet. And it also did that when the market bounced back. So I am flat Tesla. You could be in like tier 1. Maybe you're in tier 1. If I felt a little bit more into it, I'd be in tier 1 and probably give myself a little bit more room, because it still has this whole range here. But there was a nice trade from red to green above this, went as high as 257.38, and then just lost steam. If you go to your if you want to go to your 5-minute to see what you could have done on this. Here was the first initial move, getting above this spot where shorts got squeezed, came back up, and then really, I was watching it. I was long when I went to the gym, and I put a stop in. I figured it shouldn't get back below this, hour base. So on this bar, I think I got stopped out around 253.80, and then I just didn't touch it again, and it grinded lower the rest of the day. So this inside wedge to the downside. So here could have been your quick buy if you were really fast. Above this spot and then above that spot, and then it tried to give it more time and then just didn't work. We'll see, I guess, if we revisit another time. And then real quickly, a lot of stocks that already reported last week, all are in the penalty box, and they somewhat had inside days. Inside a day means inside the range of the post earnings day. So think to yourself, what came out with earnings? Oh, Google came out with earnings. So what did it do today? Did it get into the gap because everyone thought it was cheap, or did it get downside follow through, because it's that weak? You know what Google did? A whole lot of nothing. So we'll still figure it out. So right now you have this inside range, and we'll figure out what is next. Okay, still a big hole in this chart. Netflix, same situation. Okay, you had your gap down. Here's this. They tried to get it below the prior low. They couldn't again, and even today sort of got below it, but there was no downside follow through. So in this lower range, and now here's your new point of reference, and just dead. That's why the market's kind of lethargic and can't break out, because you have the old winners and where the growth is supposed to be, kind of broken in the penalty box. Look at that big gap, unfilled. Microsoft, the same thing, tried to have a little bit of an inside day. I guess this, you could say, looks a little bit more like an IBM, where it's closer to the earnings gap. So at this point, we'll see if there's a trade, if we can get it. If it trades above this, maybe you get a trade into the gap, but you only buy it if it gets above it and stays above it. IBM did give you that trade. The day after earnings, it kind of hung in there, which was right here, and then it gave you a trade into that earnings gap. So that acted better than your Netflix. And now what's it doing? It's it held here, and maybe with some time, if it could digest above this, it'll regroup and continue, and then maybe next quarter will be not the 17th quarter of declining revenues. But anyway, so that at least there was a trade there. Let's see, ILMN. What did it do? It's not doing a heck of a lot. That's why I'm just sitting in some calls, because I thought maybe it's been absolutely crushed. I don't want to trade the stock, because the stock is really tough and it's news driven. So I went out, I think, what I go out a month and said maybe it fills this gap, and at some point it trades in there, but overall still in the lower area. So, to make a long story short, if you're in something, be in it for a reason. If the reason doesn't follow through the next session or so, make sure you get out of it, you use stops so you don't marry it. At this point, the market's pulled back, but it's not broken. It's bending a little bit. There's definitely some pluses and minuses. On the plus side, like I think all 10 S&P sectors above the 200-day for the first time. Yippee. On the negative side, we really don't have any generals. We don't have stocks breaking out to 52-week highs, or at least quality names that could help drive psychology. So we're in a weird spot where you have the Fed Wednesday, low volume, and pick your trades wisely. And have a good night. I'll see you tomorrow.